Today is April 19. The market is closed now, but we wanted to go over something very unusual that happened today. And we had some questions about this as well, so we thought we'd answer that. It was about these very unusual options, close to 130,000 of them you see here, and expiring in just 2 days. This is for Colgate, and you'll see here, these are the 70 strike calls and the 72.5 strike calls. And so these are deep in the money. You'll see here the delta is 100 and this one's 99. So what does this mean? Why did they do this? And so we're going to answer that question in this video. So you'll see here these on the options time and sales. This all happened towards the last hour of this trade, right? So all of this happening at about 3:20 around that mark, and you'll see the largest orders are here. And what you'll also notice is as we scroll down, all of these are all the same strikes, the 70 and the 72.1, and we go down further down and down. And the earliest one we see is about this 314 mark. You'll see here the 314 here is the earliest when this all started. So about 314 you'll see here is the earliest it started. And so, well, what does that also mean? Because if we look at that chart on the minute, this is the minute chart, you'll also notice that right about 314 here, that's when the price started to rise. Look at this rise. This surge in price just suddenly started to change. It went up. And so about this 314 mark, all the way till when they stopped with this unusual options, what we're calling it now is actually something called price scalping. So what they were doing is an example of that. And so what that is if you notice here, if we put this down on the time scale, like if we start sorting it by the time, you'll notice as we go down in time, it ends at about 323 with these last orders that are the largest ones, all right, with 10,500 contracts. And you'll notice that a lot of these large orders at the end here, the prices that were paid and then sold and the price that these spreads were worth, they come out to about $2.50, which is the maximum price that you can ever get in a vertical spread, because the difference between the 70 strike and the 72.5 strikes is 2.5. Therefore, the max profit between these two is 2.5, and that's why at the end of it, they're able to get that maximum price when they sell it. Okay, and so you can see here that what they at the end, when they close out their positions, that's what they're getting, the 2.5 maximum. Okay, the colors here, they don't necessarily mean buy or sell or anything of that sort. The green doesn't mean buy, or the red doesn't mean sell. Okay, so when we look at this tape and you see all this stuff, the colors, you have to actually ignore that. They're only colored based on the current mark, the bid ask prices. And so if you want more information about what these colors mean and everything, let me put a link to a video that we made about colors and how to differentiate colors and what they mean. So we'll put that link up there and you can watch that if you haven't. So back to this, what they're doing is scalping the bid ask price here. And so if you look at the 314, right, in the kind of the start of this whole price scalping, where they're making just a few dollars, you'll see that in the beginning, they were able to get some of these prices for like the 70 strikes here. Right in the beginning at 314, they got 1,175 contracts for $5.10. So they were able to buy it for $5.10, right? And then they were able to sell the 72.5 for $265. So some of these were done at that price. So what is the price difference there? Well, if you look at that, if we calculate that 5.1 subtracted by the 2.65, you'll see that it's actually 2.45. And remember what I was talking about a little earlier. Towards the end of it, they were selling them for $2.50 at max profit. So therefore, they were getting, for some of these trades, they were getting $5 each, right? And so the profit was $5 each. And so let's say, for example, this was 1,175 contracts that they got. If they got it at $5.10, then $5 times 1,175, that was a very easy $5,875 for that. They scalped that price there, where they were able to buy the 70 call strikes at the bid price here. They were able to buy it at the bid price, but then they were able to sell it at the ask price. And so that's what scalping is if you can get prices at the very favorable side of the market for, so that's what happened there. And so when we look up at this trade, there were some parts where they did not make a profit, where it was 250. Like if they don't get the pricing at 510, like here they got it at 510, they probably made that $5 profit when they can do that. Sometimes you could see that they were able to get a higher price for the 72.5 calls. So here they were able to sell it for a higher price, right? Because they were at other times they were selling it for 265, but here they were able to sell it at 280. So that's good for their overall net profit there. So imagine if they were getting it for 510 and then selling it, getting that 280 there. Well, that's a difference. You'll see here, 510, and then they sell that call side for 280. Well, that's $2.30. So that's a $20 profit if you take into account the max profit is 250, right? So that's how this price scalping works. See, here's a bunch of 510s they're getting, right? Another 510 here. Each of those are $5 of profit there. And as we go up in time, you'll see a couple of these 510s coming in, and then towards the kind of the end of the time period, around like 321 here, they start to get their max, kind of close up all their trades, right? So now all those are closing up. So, and then finally at 323, they're done, right? So I started at 314. So in less than 10 minutes, this whole scalping strategy was done. And you can do the math, but for each of those trades, they were pulling in about 5K. So yeah, it's scalping. It's a lot of algorithms. So that's what's happening with this trade, and so that's why we had this increase in price suddenly towards the end of the day on Colgate, right? So yeah, I hope that helps explain what was going on towards this last hour on Colgate, and this interesting, very high volume in options here at this April 21s here. So, and if you learned something in this video, please give us a like here. Helps us continue making these videos and look into things when people ask us questions, and we wanted to kind of provide more insight into what is going on in the world of unusual options. All right, thank you very much, and take care, everybody, and have a good night.